Welcome to MacroMentors podcast. We're here with another one of our mentors, Charles. Just before this, we were talking about how Charles kind of escaped to Japan to hide from COVID. Charles, do you want to give a little bit of an introduction of kind of who you are and, what you've been up to?
Sure, that's very kind, George. Thank you very much. I'm an American. I am living, obviously, now in Asia. I grew up sort of half in Asia, half in the United States, and I found myself during the previous bubble in Japan, and like any young man, was ambitious and wanted to make money. So I entered the finance industry, which was at the top of the world at the time. And little did I know it would sort of fall apart from there, but at least for the economy, it wasn't so great, but for me professionally, it was really interesting and a lot of great stories and memories from that time. And then I followed the bubble around to London, briefly in New York around Y2K, then back to Japan for its next bubble, then back to London, and then in Hong Kong, where I have been, for the past 10 years. And now I'm sort of transitioning out of Hong Kong. But it's been really interesting. I've spent most of my life in finance, building and running various businesses. And then I've been, for the past couple of years, running some tech businesses, which are very, very similar to what the environment for financial businesses was 30 years ago. You might not believe that. People love to share, and we're happy to, give you credit for deals, which is not so much anymore. And continue to invest in new managers, and that's quite a lot of fun to find them.
How has finance changed in your view over the time?
Well,
obviously,
it's become less dynamic and much more consolidated. And so
right.
I sort of, when you look at the way that tech runs today, where there are a lot of startups popping up and people are willing to share a little bit of code, and you have GitHub and all of these great platforms that people kind of use. 30 years ago, in the 1990s, you didn't have, obviously the internet. Bloomberg was great, but, an email, but that was about it. You didn't have mobile phones. You didn't have a supercomputer in your pocket. But there were lots and lots of small businesses. So even storied names like Bankers Trust were not all that big. So you could go out for drinks with a guy at Bankers Trust, and he would say, "Oh yeah, we're working on this thing called, first to default." And you're like, "What's that?" He says, "Oh, it's a credit default swap. Let me show you how it works." And so you're like, "Oh, that's fantastic." And so you learn how to do it. You bring it back, and you implement it in your business the next day, and you make some money, and he makes some money, and everyone's happy. And off you go. But now, you have some proprietary information like that you would never, ever tell anyone, because, that would be the end of your job. Whereas before, there were so many companies you could move around to. You're like, yeah, of course I want to tell him, because I might want to work for him pretty soon.
Right.
And, we might end up in the same company.
It's quite interesting. I spoke on a kind of panel at the CME recently, and there's kind of quite a big regulatory push to try and push more things on exchange. And one of the conversations that I was trying to have with them there is like, everyone's become very guarded about their business. And it's not like, it was like, look, if everything goes on exchange, the pie has to get bigger. And like, everyone has to try and make the pie bigger together, which is like a completely different attitude that most people are kind of used to from the last thing. It's like, I've got my OTC relationship with this guy. That's my moat around him or her. And that stops anyone else being able to get that business, rather than thinking like, what, if we made this like way more accessible to more people and lowered the barriers to entry, the market could be twice the size. And it's quite a kind of, I think that's how it used to be, right? Like that was the game.
Well, it's really interesting you say that, George, because a good regulatory environment should be one that encourages innovation and encourages, new ideas. And you can see what happens when you have a lack of regulation, but a lot of innovation and new ideas. So in the early 2000s, and well, really from the 1980s onward, as China was beginning to open up, futures exchanges became really popular. And in fact, when I say everyone, there were 40, 50 futures exchanges offering every type of possible future you could imagine. Not only just rough rice, but I've got some corn from this particular province. There's some aluminum cans. Let's do a futures contract on that. And because it's very speculative in nature, and people being speculative, not just the Chinese, but everyone around the world, some of them were very, very popular. Some of them people went bust. Some of them, kind of fell apart. And what happened is they didn't have a good regulatory environment, right? So they didn't have the regulations around who could list, what a standardized contract look like, what happens if, what is the role of the exchange in making sure that settlements occur, properly. And because they didn't have that, they decided to just close everything down except for 3 exchanges, which then became 4. So you got one in Zhengzhou, you've got 2 in Shanghai, and that sort of is the way it came about. But you need both good regulation and innovation.
Yeah, so before my current job, I was a commodities trader, doing kind of mainly base metals, and it was funny, like the market would be dead. And you're like, okay, what are the Chinese up to? That was always the question, right? You sit on the kind of Western trading desk and you assume that there's like some kind of nefarious thing going on in China, or there's like some plan that's been hatched that you don't understand. And it'd be like, no, mate, they're just all long apples. They're like, Apple futures have gone nuts. Like everyone's in on the apples trade, and like everyone's making loads of money. So, like copper's not that interesting. It's not the flavor of the day. And then, like pretty much very kind of China centric trading, like very heavy momentum, right? The thing goes absolutely ballistic. The guys who got in early are, become billionaires, and then it drops like 80% in a day. And then, next month it's, cotton futures or whatever. But it's always like, it seems like domestically it's always kind of rotating, and that was the game.
Yeah, sure. Kind of like crypto. What's the coin of the day?
Yeah, for sure. There's definitely a bit of that out there.
Is crypto the new place to be in finance? Because obviously you've seen a lot. So the starting environment has obviously changed. Let's say I'm a graduate, right? And I'm thinking of entering finance. I mean, a lot of things have changed. Like, how should I position myself?
Well, you're talking really about Bitcoin and Tether and all of these other types of non-fiat currencies and whatever you want to call them. I've got 2 different views on these, which are not necessarily mutually opposed. But one, I really, because I've spent so long in finance, really believe that if any 2 consenting adults want to have some sort of contract between themselves, off you go. As long as it doesn't affect anyone else. If you say, let's bet on these 2 raindrops coming down a windowsill, fine. You should be able to bet on that. If you want to bet on the price of Bitcoin or Tether, whatever you want, off you go. But it certainly is not a currency, and it's not a store of value, and it's not a type of thing that's going to to really change the world. So, I don't really like to invest in sort of things that I don't particularly understand or like very well. So I stay away from them. But again, people bet on all sorts of things. Look, when I was a kid, I collected stamps. Like, what's the value in a stamp? Well, I mean, there's some residual value, but what 1 cent stamp? Well, it's because it's a social contract, right? So I have this item, and you look at it and you say, oh, that item's worth 10 cents. And George looks at it and says, no, it's worth 11 cents. And I say, well, no, it's probably worth, 13 cents. So here's a market, right? We all have different views on what the value of something is. And in fact, this is what essentially all financial markets are. They are social settings for the exchange of viewpoints on the value of something, or just an exchange of viewpoints, and the monetary value is the medium in which we exchange those views. So if we're looking at a stock, what's the value of this stock? Well, inherently, there's really obviously, if you want to go the academic route, it's it's an option on the assets of a company after you've sold everything off.
Cash flow.
To give all the debt owners, whatever's left over can be split. But really, it's not worth anything. It's just sort of, it's a call on future earnings, if you will. And we just can bet on that. But it's a social, it's a social contract. And so Bitcoin and Tether are social contracts. And, the more people that do it, good for them.
I'll play devil.
So should I bet my career? Should I bet my career and go into crypto? Is that like the question?
Well, it depends how long term you What's really true is taking how long term you want your career to be.
It's an interesting one. I'll play devil's advocate here. I'll give you the other side, which I think is interesting. The more I kind of look at finance historically, the more I think that actually like people just invest on what's culturally acceptable to them. You've always wanted to be long kind of US equities because you're a big equity culture. You want to be Commonwealth property, and you've wanted to be long like the saver's debt, right? Like if you've had that portfolio on for like 40 years, it's pretty interesting. And then you have like a demographic adjustment that has to be made. And I don't know how much time you've spent hanging around with Gen Z, but the one thing they are is like very, very digitally native. And the one thing they don't actually care anything about is debts and stocks. And cryptos are exciting to them. And when you kind of think about that, like culturally, I think they're actually pretty interesting. I think that when I look at where our young staff invest their money, it's nearly entirely into that ecosystem. Some of them are digitally scarce. So you would assume that like weight of funds versus digital scarcity means to like accretive pricing. And then I think the other thing that is a little bit, I think it's like a little bit overlooked is like, because tokens are now so easy to kind of create, you can create like reward structures that are really interesting, really fast and really easy, right? Like I can be a pub and I can, every time someone gives me a beer, rather than give them a loyalty point, I can give them a coin, right? And that coin is actually transferable to other things. And if I decide to use that coin as some partial value of legal tender, right, that actually like crypto starts to become quite valuable. And I'm like slightly fascinated by, there's a project called Steppen. And basically Steppen, you buy like a digital NFT of some shoes, and every time you go for a run, it rewards you with tokens. Well, like that to me is like the next branch of behavioral economics, right? Like once governments understand they can do this, the Chinese arguably do understand it already. But it's usually done from a penalty factor, right? So it's like, if you do this bad action, I will penalize. And where we're going, I think, is like, if you do this good action, here's some reward where someone is going to exchange it for something. So if you're Nike or something like that, and you say, actually, Steppen's pretty interesting to me because I can, if you get enough Steppen points, I'll give you $10 off a pair of trainers. And you've now got like people wearing Nike trainers, people running in them like crazy to get more Steppen points. And the people who don't want to use them for more trainers can swap them for other things. And I think the behavioral economics kind of, we're very used to this kind of advertising like model, which is like attention. I actually think that we're moving kind of away from that, and we're into like tokens rewarding effort. I think that actually makes the crypto sphere more interesting. I think what the problem with it is like the gains and losses are so spectacular that people can't see beyond the speculation in some cases. And people are like kind of the hero to zero, I get 20% on this stable coin, and I get 0 in the bank account, and they don't assume that there's like a serious risk attached to it, right? And
well, they can make all your friends envious by posting on social media that you've done something amazing, and they say, "Oh gosh, if only I had done that." Like George, I just got it so together.
Yeah, and I think the other point is that like we're quite used to living and being from like quite kind of stable like financial like system, and if you actually think like, what would you rather hold, Tether or your currency that's rapidly depreciating in somewhere in the emerging world? Like Tether actually looks pretty good, and right now the hurdle for you having like a dollar cash bank account is huge. So
I would really take. I'm not sure what you mean by the depreciating value. What exactly do you mean depreciating value?
So like if you're, let's say, in Argentina and your inflation's running in, maybe the mid 50s, probably on average.
In Argentina, not here, but in Argentina.
Yeah, but obviously like that is actually like a decent proportion of the world lives in those conditions, like places like you 50%,
have 50% inflation.
No. I just mean to people who live in this like very deep negative real rate environment, like nearly constantly. And for them, they don't have like a savings channel, right?
I mean, if we want to talk about inflation, right? I mean, inflation is not very well defined, but I think the Fed and other academics sort of say it's a generalized rise in prices, right? So if you're exchanging one thing for another, right? If you're exchanging some barley for some corn, right? The relative value of those may fluctuate. One may be going up, one may be going down. And you might have a medium that interacts between them, which could be, if you want, fiat currency. And so you're just still exchanging this for this, but you're just using another medium of exchange in between. And the medium exchange itself doesn't disappear or devalue, right? The prices, the relative scarcity of something might go up, right? And then you've got to use your dollars to buy. You need more dollars to buy something of it, but it's not inherent in the currency itself per se. Like if we talk about Tether, we talk about Bitcoin, right? So suddenly the price of corn could go up and it's not one Bitcoin now; it's 2 Bitcoins. So does that mean Bitcoin is a forever depreciating currency? Well, not really, because it's not the thing itself that's depreciating. It's that there's a generalized rise in prices due to supply and demand mismatches.
Sure, but I would probably, again, take the devil's advocate on that. And like, you have to probably view currencies as relative to each other. And there's very clear like devaluation trends of certain currencies at an aggregate.
I mean, so the difference between a currency is just, if we look at the long run, should really come down to the difference in the interest rates. If the currencies are fully fungible, so let's say something like, the Japanese yen and the US dollar. So, we see the yen, I think the yen interest rates are less than US dollar now. So it's an appreciating currency versus a depreciating currency, which is the US, and you can freely exchange them back and forth and hold one versus the other. Your preferences are not limited because they're fully fungible.
It doesn't really like actually end up working like that, right? Because it becomes, there's like a real arbitrage, right? Where this kind of idea of real rates and risk premium actually like get interesting, and why you see like very long periods of total return outperformance of one currency over another. Like your argument would say that like that shouldn't exist; it should always mean revert.
Okay. Well, there's an academic view that that there's kind of a reversion to the mean, if you will, and there's a long-term trend. But within that long-term trend, of course, there are things that go up and down. I mean, this kind of brings back to where you started the discussion about the types of investing that maybe Gen Z or other people do. And I think there's probably one place that everyone can look if they're really interested in this, and it's a book by Charles Mackay called "Popular Delusions and the Madness of Crowds," which absolutely
that's a good one.
Through amazing. And if you don't like to read, watch the speech by Jeremy Irons in Margin Call. It gives you the summary of the book in like a 3-minute speech. One of the greatest speeches. That actually probably is one of the best movies on Wall Street you can ever watch, because it's really good, really true to life, and all the actors look like the people they're playing, including Paul Giamatti playing Ben Bernanke. But when 2006, 2007, 2008 came, like that was serious problem, right? That was a serious bubble that was in our own lifetimes, right? There was a run on a bank. I mean, there were people lined up outside of Northern Rock. That was like, wow, how can that happen? We're not on the gold standard anymore. How can that, how could a run on a bank possibly happen? Well, people lose, they go manic in one direction and then they go manic in the other direction. And, when you talk about the momentum in China, that's an expression of that manic mania. The same thing with Bitcoin or Robinhood and GameStop. It's like, wow, other people doing this. I really love this. Let's all go do this at the same time because it's a lot of fun. And, again, you get into the popular delusions. I mean, that people we're just hardwired to be social animals and to follow and do things that other people do. And the really hard, for a lot of good investors, the really hard thing is to not be a social animal and to kind of step back and say, okay, what are the counter trends? Why should I, how should I look at that? You might, one of the one very interesting long-term investor is Charlie Munger and his partner Warren Buffett, who sit and look at things and make a real long-term assessment of the value of something, and then just buy it and hold it for 30 years. I mean, you and I could have gotten rich also if in 1960 we'd bought Coca-Cola and just held on to it for 30 years. But
I think they ask they ask themselves like, what will not change instead of what will change, which might make sense if you're buying chewing gum companies, but like it's possibly not like, a good way how to know what's coming next. Would you agree?
Yeah. Well, coming next, right? So none of us have the foresight of, the gift of prophecy. I think that died with the Greeks, but that's right. We have a little bit of an idea of what might be coming, and that's by using statistics, right? So if I were to say, I mean, this is something we've talked about, but if I say, if the stock market went up on Monday, Tuesday, Wednesday, and Thursday, what do you think the market's going to do on Friday? And most people would say, well, I don't know, it's gone up, it's probably going to go down. But if you look at things statistically, it's more likely to go up than it will to go down. And so we use statistics to kind of look back over a period of time, be it 1 week or 6 months or 15 years or 3 centuries, and try and use that as a guide to what might happen. When I say might happen, you can create a statistical distribution of the various paths of something that might happen, and then make your bets based on that. So you can't see the future clearly, but you can kind of hear a little bit of the echoes of the past into the future.
But I think you can make educated guesses, because there are a lot of kind of structural trends that are probably they have certain degree of high probability where you can say, okay, is there going to be more mobile phone adoption in Africa over the next 5 years or less? So you kind of know the directions of these kind of larger trends or demographics, or like what we've seen with China here in Asia. I think this has been a very interesting topic over the last very recently. And I think this was entirely predictable. Even in 2012, when I studied in China for a little bit, I think it was pretty much obvious to anyone, or especially the more kind of defense and kind of more think tank people at the time, compared to the business community, which now is really just grappling with it.
Yeah, of course. I mean, that's the beauty of being able to use statistical analysis, is you can look at similar sorts of countries in various levels of development, and say, okay, country in this level of development, country C, B, C, D, E, F, and that level of development, what is most likely to happen? Well, everyone's going to buy mobile phones, so let's buy mobile phones. I mean, the interesting one right now, obviously, is the mortgage crisis in China. The mortgage crisis in China has a lot of things around it that are really difficult to really difficult to look at and see. And one is, the declining population, which means there are less people who are going to want to buy houses. On the other hand, people have, more disposable income. So they're more likely, once you have more disposable income, to put that in particular in a place like China. But the overvaluation of so much and the overbuilding is so clear that, even if the government were to bail out all of the property developers, which they very well may do because it's a communist state and they can do things like that, it still doesn't solve the overvaluation crisis, right? You can make sure that all of the apartments that should be built are built, but the value still is overvalued. And, that eventually has to come down, as it did in Japan, as it did in the United States, as it did in virtually any country in the world where assets get overvalued, where the supply exceeds the demand, then you're in trouble. And I really don't wish any of my Chinese friends to suffer any problems or hurt or pain through a mortgage crisis. But it's very hard to see how that mortgage crisis will resolve itself in a way that's different than any other mortgage crisis has resolved itself in the world.
I mean, for sure, something has to happen. That's one of your predictions. I think it's a good prediction. But Charles, if you obviously you've seen a lot, right? So we talked a little bit about your background. If you think back, or let's say you would have, some advice for your, let's say, 20-year-old self from all of the experience that you collected, from all of the, adventures and challenges and all sorts of things, like, is there any particular advice that you would give your kind of, 20-year-old, 25-year-old self?
Propose to my wife earlier? I don't know.
Okay, that's
good.
Spend more time with her. Spend more time with my children. It's funny because that question has, there's the personal element, which is
right.
always, often times when we're pursuing our career, we neglect our personal element. But for the professional side, and I guess that's kind of what you're getting at, is what is it that's important in reflecting on one's life in terms of personal development. And the only thing I can say really is to just continue to be curious. That curiosity will really help you in all sorts of ways. Find out what things are. Don't ever be afraid to ask a question. There were many times when I was when I first started my career, and I'm with very important people, and they had very important things to say, of which I had no idea what they meant. And I didn't ask the question, like, what is that? Can you explain that to me? And most people that you work with are going to be, oh, fine. He works with me. I see him every day. He's now we work from home, so we don't see anyone. But, he's in my office. Yeah, of course I'll take him aside. I'll take her aside and show her what's going on. So asking those questions, being curious and trying to figure something out is really, really important to maintaining your intellectual energy over a long period. That
is actually basically one of the reasons that we actually started MacroMentors, is people are too scared to ask questions of their that something's changed like in the last 15, 20 years where everyone is suddenly scared of asking any questions for fear of retribution, right? It's no longer like, how do we collectively learn together? How, does the team win? It's like, there's a lot of like, I, and people get very scared that if they ask a stupid question, something bad's going to happen to them. And it's usually actually the opposite. It's like actually like the older person understands that this person actually is trying to learn. And what we kind of, I guess part of our hypothesis is like actually like Google isn't like the best place to learn. It kind of like gives you the bones. And then basically when I worked on this metals kind of trading desk, and there was a story about a guy who worked for a very large trade house. I'll kind of leave the exact firms out of it. And he joins the aluminium desk of this trade house. And he basically realizes that he's better to ask questions of his brokers than his colleagues. So all day, like stupid question, like how many tons of metal in one contract, like really basic stuff that you expect that if you're working at one of the top places in the world, you'd know. Doesn't stop asking questions. Suddenly becomes like trader of aluminium on desk. Keeps asking stupid questions. Like they just never stop. Apparently, right? I didn't actually deal with the person. They never stop. Next thing, he's like head of aluminium trading. He goes out and becomes global head of aluminium by the time he's 30. And I think by the time he's 35, this particular firm went public, and he exited a billionaire and walked away. So it's always been the good lesson to me that don't be too scared to ask because someone else will, and they'll be, potentially the wealthy, successful person ahead of you.
That's I'm sure you've heard this advice from many, many people before, but when you're young and you're working up the courage to talk to a member of the opposite sex, and you're like, oh my God, what is he going to say? What is she going to say? Like, well, the worst thing is they can say no. Like, all right, no. So you move on and do something else. It's not your physical body is not under attack, and your mental health will not suffer if someone says, no, I don't want to tell you. It's okay. It's okay. Find someone else.
Yeah, but most people don't have to lose anymore, right? Like that's,
well, social media exacerbates that, obviously. I can't be seen to be anything less than perfect. And
yeah, I think the structure of it's like quite, we've tried to take a lot of pain away, like parenting, like participation medals, everyone gets a pay rise, like competition has sort of like exited the system a little bit, and that makes the fear of failure quite hard.
Yes.
I even
ego's overblown.
Yeah, and yes, everyone has massive ego because they get 100 likes on their picture, but they can't ask their boss for a pay rise. But that's kind
not
of
the boss for a pay rise. They might not say, okay, I wonder if there's any correlation between steel prices in the summer and aluminum prices. Like, let's investigate that. I mean, this is a fictitious sort of thing. But that's you want people who are able to think that way and to find new ideas and just try them out, even if they're wacky and they're no good.
For sure.
Try.
Going back to Armin's question a little bit, and kind of, let's say, slightly rephrasing it. If you were starting again today, what would you do? So, like, you were, fresh out graduate, but you had everything that you've learned so far. You've got to apply for jobs. You've got to go and plant yourself inside the sector. What would you be doing?
Well, it's a difficult question because there's, again, I'm leaving aside the personal. We're just talking professional here. Personally, it would probably be join a Buddhist monastery and meditate on the end of the world, because it's quite interesting and difficult problem to solve. But that aside, what is the problem of consciousness? But professionally, really, it's looking for something that is intellectually challenging, because oftentimes the route has been, I need money, or I need to do what other people are doing. And when I found that I had been pursuing just that, it really became boring. It was difficult. The emotional toll was so great. Whereas when I pursued something that was intellectually promising and challenging, it became much more fun and much more interesting. So you think about your own abilities. So you say, well, okay, I want to go into finance, and I want to do something in finance that for me is intellectually challenging. So that might be building the best sales team ever. Trying to find ways to motivate your sales team to bring deals in and to create a brand new way of harnessing the energy, the collective energy of everyone to be able to provide good services to clients. It might be, as some friends of mine have done, have tried to create in one part of finance a niche in delivering better fund services, and through that, really having a way to talk with all of your customers and try and solve their problems at one go. Like, all these things are intellectual challenges that don't necessarily have to do with math and science. And there are, obviously intellectual pursuits in finance that have to do with math and science that are equally interesting. Statistics, obviously, I mean, that's I told my children I'll pay for college, but you have to take and pass some statistics courses, because that's the ultimate truth in life, is to be found through our understanding of statistics and probability.
But let's paraphrase again a little bit. I think because where we are coming from is, well, they're obviously in some industries the world is moving in trends always, in waves of some areas the odds might be stacked against you. In some they might be working for you. So I think George's question is really where do you see the opportunity for someone young, just out of university, starting out?
First of all, I'm getting your question better now. But first of all, the thing to realize is the advances in machine learning and artificial intelligence are moving so rapidly that many, many tasks, not necessarily jobs, many tasks are going to be automated or done by machines. So this is everything from filling in forms to handling routine customer inquiries, but also some high-level planning as well. I'm investing with managers now who are using machine learning and using some unsupervised learning to just look through different masses and masses and masses of different correlations between different types of assets and finding a system that works. So the human being itself has removed himself from from a lot of the actual the calculations themselves and gone to high level planning. Like, what is it that I'm trying to find? What is the high level planning that I'm trying to do? So the real place where you're going to find a future is either in a job that has a customer facing element. So some way you attach yourself to the emotional needs of the client. So that's in sales, that's in service, that's in some way you're going to actually talk to a human being. The other is in high level planning. So what I want to do is I want to be able to learn to use, artificial intelligence, machine learning, high level coding, those types of things to posit questions and to solve those questions. So you really are trying to look at the places that give you, based on your strength, one of those two things: handling the emotional needs of someone in terms of, if we're talking about finance, of front end sort of front end business, or looking at the high level planning and learning coding and machine learning and trying to find ways to make the processes and get yourself involved in moving an organization forward. And not just finding, well, I want to be a trader in this little tiny niche and I can make my money and off you go, because that business is going to move away quite rapidly. Like those people are alas, many of these tasks are just gone because the machine can do them. Any rote task, a machine can do it more quickly and more efficiently. And so you have to find a way to...
I remember when Kevin Kelly came out and was saying, okay, so in a couple of years from now, and I think it was 3 years ago or 4 years ago, you can just download a machine learning and AI and make yourself leverage this for your business. And at the time I was laughing. Now it's actually super easy. You don't even have to be a coder for it. So it's quite interesting how this is shifting. For sure.
There's a lot of, again, that's high level planning, right? So you're shifting away from just being a coder and trying to understand questions. So, this is when you're just going to university, things like philosophy, things like, logic, those are really, really important tools to have in your brain to be able to think through problems and processes very logically and be able to find answers to them. So when you're going to finance, you say, well, I want to do something that's going to lead me in a management direction. Right, that's going to lead me to be able to interact with the team and to be able to learn a high level planning, right? And it's aiming for a little bit more abstract a goal than a very very concrete goal. Look, we still have 10 or 20 years before artificial intelligence is going to be good enough to replace everything we do, or a lot of what we do. But there's still in finance, there's still a lot of really interesting ways to look at trading different types of asset classes, some of which we don't exist yet, and will exist as, the industrialization of the rest of the world happens. So, China has rapidly industrialized and India is in the middle of its industrialization. And you have places like, Uzbekistan and Georgia and vast swaths of sub-Saharan Africa that are going to be industrializing. And there will be new things to trade and new ideas to be able to work in. So finding those frontier markets is going to be much more interesting than looking at a little bit easier maybe than looking at the developed markets. The spreads are higher.
You very briefly mentioned that kind of, I guess, meditating as a monk, thinking about the end of the world, which I guess brings us onto the idea of through your career, what do you do to unwind / kind of look after your kind of mental health or deal with the challenges of some of the things that have been put in front of you?
Yeah, it's a hard thing. I mean, exercise for me is really my biggest release. I'm a long distance runner. I used to run ultra marathons. I still try and run a marathon at least a year, and that's really the way that I can sort of just get nothing around me, just my thoughts, and then oftentimes you think it's a type of meditation, so you can often think about really, really interesting problems and come up with solutions while you're just mulling them over in your head. When you don't have the distractions of a screen, or in our cases these days multiple screens, your brain sort of relaxes a bit and finds these interesting solutions. I know other friends who use music or social interactions to unwind. I mean, in Japan, the biggest way to unwind is to go out with some friends and have some drinks and have a meal, which is a great recipe for happiness. Just getting away and interacting with other people is always very, very good.
The pub is the answer.
Yeah,
the pub is the answer. Oddly enough, we always come back to that, where are my friends hanging out? They're at the pub, right? Let's go down and see my friends.
Yes. The pub seems to have probably the biggest moat of all. It's kind of like bad day, average day, great day. Interestingly enough, I listened to Michael Pollan's new book, which is called This Is Your Mind on Plants, and he actually talks about how prior to the pub, it was all about coffee houses, and London actually kind of built its industrial revolution on the back of coffee, which I didn't actually know. And basically, coffee allowed us to break our circadian rhythm, and it was a lot more effective than people drinking beer and working. Effectively, a lot of
what a surprise!
So what are kind of pubs now were historically coffee houses. So Lloyd's of London was a coffee house, and Tatler magazine actually started as a magazine to report the gossip between the different coffee houses, which I thought was quite cool. Just the liquids seem to change. Personally, don't drink coffee. I quite like beer, so I'll stick to the pub. So moving on, what are the current trends that kind of fascinate you? What are you spending your time on now?
What are you meditating on?
Yeah, what are you?
Well, I mean, the hard thing. It seems rather strange, but one of the things I really enjoy is trying to figure out consciousness. It's a really difficult thing. What is human consciousness? Do we even have it? But that aside, professionally, looking at new managers and trying to find trends in new managers is really a lot of fun and intellectually challenging for me. I can't mention names, but there are managers that I look at who have used machine learning in some really clever ways to try and find surprising answers to questions such as, why does this seem to have some relationship to this other thing, and how can I quantify that? In what way can I quantify it? And this builds on the back of obviously momentum and if we're going all the way back, very, very early sorts of charting, there are patterns that repeat themselves, and the patterns repeat themselves because people repeat themselves. People do the same damn thing again and again and again, and you can tell them not to do it and they'll still do the same thing again. And that shows up again, as I was mentioning before, in that social venue where you're exchanging information through the medium of value. So those repetitions show themselves up. So looking for customers that do that, and then there are.
Is this directly related to the consciousness part? Is this directly related to the consciousness?
But again, if we are, if we are just robots, then you might as well give your trading up to a robot, give all your investing up to a robot, because they do a better job than our own robots. Because we've got this strange neural circuitry that makes us do crazy things once in a while. Like go to the pub and drink beer, which is not good for you. So, or maybe if you meet someone who'll give you a hot tip. And the other thing for me that's really interesting is to watch the development of markets that I've had a hand in helping develop. So I have a very, very keen interest in watching the development of the Chinese futures market. I don't know if you know, but I was when I was working for Winton Capital, and Kurt Settle and I created the first foreign advised fund in China, which was a very simple momentum strategy on a couple of futures indices. And I went with our lawyer at the time, Pat Gilman, and we spent several hours doing lectures to the equivalent of the CFTC in China, and showed them what good regulation looked like. And to their credit, the Chinese basically copied all of the rules and regulations of CFTC and implemented them with slight changes in China. And it's done an amazing job at creating well-regulated, very, very active futures markets. And watching that develop has been really, really a delight to see. I wish they would open up a bit more to the foreigners, but that's their own prerogative. It's their own country. They can do what they want. And then finally, just trying to find companies that are involved in solving some of the problems in the finance industry, I think are, for me, another kind of really interesting place to put a little bit of money. And so it's in between my interest in startups and my work in startups, but also in finances, there are a lot of archaic and frankly frustrating things in finance that need to be gotten rid of. right? So, for example, if you're ever in a bank and you try and transfer money, like, why does that cost anything? Like, literally, the infrastructure is already fully depreciated. You're just pressing a button, and there's a bit of code that travels from, okay, fine, there's a de minimis cost to maintaining and the servers, but that's all it is. And so when I see these companies that basically do this for free, you're like, wow, that's a disruptive company, and it's solving a problem that should have been solved many years ago. Or then when you're looking at companies that are trying to solve, and I don't think that the blockchain has quite done this properly, but are looking to solve settlement issues and make settlement much more quick and fast. Like, those type of companies, really, really interesting. And eventually, the one that succeeds will be the one that owns a huge portion of the market, because it will be more efficient and, kind of a winner take all mentality, and software will lead to that.
Yeah, I think the guys at FTX are working quite hard on a kind of
Certainly.
faster settlement system for US stocks. I do think there is probably a slight, I don't know if it would be kind of conspiracy thing, but the fact that certain settlements fail and stuff probably works quite well for some very large counterparties in the world. Like I know with ETFs and things like that, there's certain delivery issues that can often go on for days. And I'm sure that there's a profitability factor built into that. And I think it's one of those things, it's like until the regulator sort of forces everyone's hand, when there's kind of like a kind of core cartel of people making quite decent money from the fact that the system works how it is, it becomes quite hard. Usually you see some kind of spectacular blow up in something which forces the regulator's hand to address a specific issue. But yeah, it'd be interesting to see. I think, like FTX specifically have done some, so like in Europe now, you can fungibly swap their tokens for stocks with a German broker. And in my world of options, that opens up potentially long-term some interesting arbitrage conditions where those who cannot get access to 24-hour tokens, or they can't do it in the size, have to price gap risk in options at a much higher value than those who can. If you can delta hedge 24/7, you're at a massive advantage to those who can't. Right now we kind of proxy hedge things, but that's not a particularly efficient way of doing it. And I would imagine some of the market makers, etc., are like chomping at the bit to try and get this going, knowing that certain other large counterparties will probably be quite slow to market.
Exactly. I mean, you kind of point out in there, I think, the core interest, which is that the value is not always where you're looking at it, right? The value is, wow, the stock went up. Well, actually, the guys who are doing the settlements on there, they're making a good bit of money on there, and with a lot less risk. So the value is often hidden, and people finding those values are really interesting.
Yeah, for sure. I think, like in front office finance, what I see is, where there's low barriers to entry, the margins are pretty thin. I would say that the market's probably split into like three camps. There's those who've persistently spent money on technology. The likes of kind of Optiva, IMC, Citadel probably sit in those camps because they've started with a fresh approach. And that has allowed them to relentlessly eat away at the margins of the bigger players. The larger banks kind of have this interesting moat where they have kind of ISDAs and OTC business, prime, where you have to do a certain amount of business.
Oh, yeah.
And then you've seen other people who don't really have that moat and don't do the technology, and they've basically got wasted, right? And you've seen that across a lot of the kind of European marketplace. Market share has very much moved away from them. And really hard to get back, because if you're a decade behind on the technology, the spend is massive. People can't see the light at the end of the tunnel. CEOs aren't marked on those sort of metrics anymore. Very, very hard. I think if anything, it'll be the market makers that buy the banks, and not the other way around. But the regulator is very much actually forcing more things down this technology route. Like I said, with the kind of CME, futures and options all going listed. It's going to be quite an interesting period to see how that kind of unwinds. And what you've seen is as that has kind of gone on, JP Morgan, Morgan Stanley have realized that they have to take more money out of clearing, out of lending money. And they know how far they are behind. So there's this like very interesting thing where they know they need to make cash and they can provide, like the market makers aren't providing clearing yet. So it's like, okay, well, like we're going to make all the money in clearing now. And it kind of goes round in this circle, but the pool to me seems like it's shrinking towards those who've spent the money on the tech, on the front office commoditized stuff.
Stock lending, right? That's a great place to build a career. Really fascinating, interesting, and ripe for a lot of technology.
Right. Before we dig into like what you are actually like passionate teaching, maybe on MacroMentors as well, I'm very curious about this consciousness research that you seem to be doing. Because like I kind of, when you mentioned this, we talked about like human patterns. How they kind of, the people are pretty much always doing the same. So the data is always the same. Isn't then consciousness really that you being aware of this pattern can change the pattern? So that, like the George Soros reflexivity kind of way of thinking, that you can kind of break the pattern. So the pattern doesn't exist because now everyone is aware of the pattern, so to say.
Consciousness is a very broad topic, right? And there are many, many thoughts about it, and even the definition is not very clear. But one thing that's quite interesting is kind of, and I'm not an academic, so my explanation is going to be really bad, and I apologize in advance, but it's the idea of like a mental extension. In other words, when we are thinking about something, we are interacting with that thing and we're changing it at the same time, right? So, we have the idea that when I'm using my brain modulated through sound, it's good. Well, in this case, it's modulated also through some electronics, but it's coming to you and it's changing you. So my mind, in some sense, is also changing the physical makeup of your mind because I'm producing some sound. That sound's coming in your ear. It's going in your brain as well. So when there are patterns out there, human beings using their minds can change those patterns. Sometimes it's difficult because there are so many other minds, invested in this one pattern, which is, I can't possibly allow the clearing to be done by anyone else because then I would lose my job. So we'll keep this pattern of keeping this business in mind. But, the ability of people to think through things and to influence is clearly there. And the reason that we can break patterns is that we have the ability to think through and recognize them using some tools such as statistics to look through it. But other times it's just our ability to influence other people in various ways. Right? So hopefully in good ways.
Right.
There's a lot to say on the topic, but yeah.
Yeah, I think that part of what you're sort of getting at there is like the kind of presence of inertia in certain parts of the system, right? And that's
of course,
it's like a kind of correlation between that and people's consciousness. It's like system kind of works, don't change it, and that inertia stays in the system for ages.
Yes, I mean someone like Daniel Kahneman writes a lot about how human beings think, and there's a tendency of us to generalize because we need to. That's just how our brain works. We form interesting distributions about the nature of reality, and the combination of distributions is roughly similar on certain circumstances for everyone else, right? So suddenly you see some growling teeth behind a bush and you can't see the rest of it. You're like, oh, that's a dangerous animal. Like every human being, or some people have some problems with the brains, are going to see the snarling teeth in the bush. Oh my God, like that's a bad thing. Let me run away. Right. So because there are those repeatable sort of distributions that we can understand, if you are able to use your thinking, your logical thinking, to find what those repeatable patterns are, thus you can earn some money off of it. if you so desire, or create a drug, or, make some beautiful music, or do something that change the world.
Yeah, I trade predominantly options now. An option like volatility based is the embodiment of what you're saying, right? It's like what perceived distribution do people want to assign to this thing today, versus what has changed. It's probably the biggest embodiment of human psychology that you can put into a number, I think.
And not even people, like a subset of people, most of whom either personally or professionally, and when they're going to be at their desk trading, or roughly when they're going to be active. Like, then you're playing this game of, what are they thinking? Am I thinking what they're thinking? Do they thinking my thinking? Am I thinking their thinking?
There's definitely a factor. I think the other thing is, like, most people actually understand like probability intuitively. Yes. I often turn around to a graduate or someone, and I say, how much to insure me on a car? And they say like $5. And I go, okay, how much to insure me on a car for 2 days? And they say like $10. I was like, okay, but like, why is that the case? And then, like, when you start thinking about it, you're like, oh, well, like, your probability's gone up. Okay, well, like, what does that actually look like? And then you say, oh, it's snowing. How much to insure me? And they go like, I don't know, $12. And you're like, well, like, what assessment did you make about snowing? Like, okay, I'm more likely to crash, right? And that is kind of like how volatility works. People get really bogged down in the numbers and the kind of maths. To me, that's like less important. What's the intuitive bit is like, okay, wait, what's someone actually prepared to pay this off me when I want to sell it? Well, why is someone paying this? Let's go on to the final bit, and let's talk about what you are kind of interested in teaching, and what kind of someone could potentially a session that someone could buy off you on MacroMentors. How you could help them. That would be awesome.
Well, the thing that I've really spent my career in has been as an entrepreneur and an entrepreneur. So that's building businesses within companies, and then as an entrepreneur, building businesses from scratch outside of companies. And I really have spent a lot of time failing, and a couple of times succeeding. And so I've got a pretty good idea of what it means to think about how you build a business, how you bring people along to share your vision, and how to refine that vision into a repeatable process that creates a business that earns, a sufficient return for you, and if you're within a company and your company as a whole, or if you're an entrepreneur for yourself. And so I'd really like to talk with people who are struggling with, I have an idea, I don't know how to bring that idea to, how I make that idea real. Like, how do I bring different stakeholders together to create the inertia that will push my, the force that will push my idea forward within an organization? Or, I have this idea of, I have this crazy idea, and I'm working for this company, and I see that they have a loan book that's, mostly mortgages, and it's 2000, and, we're talking about 2005. And how do I save this company? Well, I've got to figure out, how I recommend to them that they should collateralize their mortgages and get them off the balance sheet. That was actually one of my failures. I told them that, and they said no. But such it is. Sometimes it's not so nice to be long in the long run. And the other is handling the pressures of doing something that you passionately believe in, but other people may sometimes doubt, and how you can overcome those doubts and help yourself understand that your vision is worthy, and you can do something really interesting with it.
Interesting. So trust yourself.
Sometimes it's trust yourself. Sometimes it's ask a friend.
Charles, if people are interested in learning more about you, or do you have any other resource that you would recommend to people?
Don't read my books because they're out of date and they're quite old. But you can come to my LinkedIn page and just say, look, I saw you on MacroMentors and I want to ask you a question. I'm happy to ask questions. I'm quite generous with my time, and please don't try to sell me anything, because if you try to sell me anything, say, oh, I want to be your friend. Why do you want to be my friend? Oh, I just want to be your friend. Like, I've got lots of friends. Thank you very much. I always use more friends. It's always great. But, if you really are need some help with something, I'm happy to try and do that. And, one of something someone told me very, very long ago, and I try to do all the time, is if someone comes to you with a specific question and you can't solve that, try and introduce them to at least 2 more people who may be able to solve that. And then at that time, they can maybe introduce you 2 more people. Eventually, they'll get to the solution, and that often helps. So even if I don't have the solution, I'll try to introduce you to someone who may have the solution that can help you.
I will have a good question when we next time talk with each other.
Fantastic.
Charles, thank you so much for your time. Thank you for coming on. Armin, I will speak to you later, I'm sure. And have a great day, everyone.
Well, thank you very much, George, and thank you, Armin. That's very kind.
Cheers.
Very interesting.
Thank you.
There.